Whew, what a morning, folks. Got me so motivated that I wanted to share with you a pattern that I'm following in markets that, if it confirms, may turn out to set up a good buying opportunity for those that can handle the risk. Well, happy August of 2021, everybody. And as you can see from the opening clip, what a beautiful morning. I've got to say, I'm the luckiest guy in the world. I was born to two loving parents who gave me nothing but love. They fed me with all kinds of lies like, oh, you can be anything you want when you grow up. Well, how has that worked out, mom and dad? But kidding aside, I get to walk the beach every morning with my dog, Tucker. So I got to thank my parents. I got to thank all of you who are out there who watch the videos and our clients at Quiver Financial and say thanks, because it was a beautiful morning. And I really want to share with you something that I've been tracking over the last few weeks, really since summer began, that I think is important for two kinds of people that are out there. One, if you're an investor that's been sitting on cash and you've been watching the market kind of run away and you've been wondering, when do I put this money to work? This pattern that I've been watching, the way it could possibly resolve, might set up a buying opportunity for that kind of person. And then on the flip side, if you're somebody who's been looking at their retirement accounts and their 401k in amazement because of the growth and the value, and you know that you might have a life change in the next 3 to 5 years, like retirement, or you might need some of that money for healthcare costs. That doesn't sound fun, does it? Well, then the resolution of this pattern, based on where we are in the long-term cycles, could be very important for people that are thinking to themselves, when do I take profits? When do I start to preserve some of this that I've been earning and gaining? So let's jump right into it. And before I do that, make sure everybody understands that this is not intended to be investment advice. Before you take any advice from any schmuck in an email or on the internet or whatever it may be, get your own financial advisor that can ask you questions about your risk tolerance and your money depth and your money personality. That's the kind of stuff that Patrick, Justin, and myself do here at Quiver Financial. So feel free to reach out to us so we can ask you questions. Because if you're looking to put money to work in investments, you've got to understand the risks and really look long-term or be very nimble. So let's talk a little bit about what divergence is, because that's what I've been watching in the market. Divergence is when you have a major index like the Dow Jones or the S&P 500. And in the S&P 500, you have possibly a cap-weighted index where fewer stocks that are of larger size may be able to push that index around. Most money managers are going to benchmark themselves or compare their performance to an index like the S&P 500. So I put that on the left. And as you can see, throughout this whole summertime, the sell in May, go away camp was wrong because the market has made new highs, the S&P 500. Now, what divergence is that when you have a market like this make new highs and other indexes like the Russell 2000 or corporate bonds or the transport index are not making new highs, that gives us an indication that there's a possible liquidity issue in the market because there's not enough money coming in and to push the tide, which should push all boats higher. So when you have a situation like this, where you have the Russell 2000, and then also the corporate bond or the high yield bond index, which I watch these two because I know when money managers are frisky and they believe that momentum is to the upside, they're going to wait into the Russell 2000 and into corporate bonds to get the most alpha that they can. So in this particular situation, you can see where the Russell 2000 and the corporate bond index have not made new all-time highs like the S&P 500 and the Dow. This is a divergent behavior. The same thing is happening in the transports and in basic materials and some of the other indexes. So what we do with this is we strategize around it, because what we should expect is that, hey, this is a sign of potential correction in the market. Maybe if this pattern works its way out, maybe for you that have cash sitting on the sidelines, this might set up a buying opportunity if you can handle the risk and if your time frame is right. Because if this pattern were to break down below these green dotted support lines, then you may have a correction in the market that you could put some money to work. So this is a great time to be strategizing and making a laundry list of things that you would like inside your portfolio. On the flip side of that, this is a very precarious pattern because many money managers are probably watching this. And what they're saying is they're saying, hey, man, if this market doesn't break down, if it actually breaks above these red resistance lines, the money managers that have been watching this and getting conservative as precautionary ahead of time, or possibly even shorting the market, trying to bet ahead of a decline, if this breaks out above those red resistance lines, you could see a short squeeze that fuels the whole market into one of these big parabolic moves higher. And you get this extended fifth wave move, which there again could be an opportunity for somebody. Now, if you're looking at your 401k and your retirement accounts in amazement, and you think you're going to need that money in the next 5 years, and this market goes through one of these parabolic melt-ups, you probably don't want to get too greedy, because where we are in the longer term picture, if you've got an event in the next 5 years, you may need some of this money that you're salivating around. So the resolution of this pattern is really important. And I'm very excited because I think it's going to resolve itself before our next event that we have on September 9th. So if you're able to attend the event or watch the event when we live stream it, we'll update you on whether this divergent behavior is setting up a correction and buying opportunity for longer term investors, or if it's resolving itself in this freight train parabolic blow off that you may have to think on the other side of. So until then, take care, folks, and remember, protect your profits.